Well, I think yields on bonds both locally and globally will also move up as a result. Hence, I expect the performance of fixed income in general to be challenged as we undergo this adjustment to higher interest rates. From a longer-term perspective, however, when you really think about it, it's actually good for investors as we will be enjoying higher rates moving forward from our fixed income investments. Yes, I think generally speaking, we do expect inflation to go higher, but we don't expect it to get out of hand. If you look at the estimates of the Department of Finance, they expect about 70 basis points effect on inflation of the tax reform. So from an overall perspective, it's relatively manageable. But of course, we have to monitor it as we go along and see if it's actually under control. Well, we're already seeing the bond market adjust to these developments. So higher inflation moving up and the additional inflation expected from the tax reform. We have seen yields move higher over the past year, and they continue to move up as we speak. My sense, however, is that a good part of this adjustment is already underway. And when you look at the levels that we're at with the 10-year government bond yield near the 6% area, we could start seeing some interest from investors at the current level. So we are probably still seeing a little bit more of an adjustment, but I think a good part of it is already done. Well, we do expect that the peso will continue to weaken against the US dollar. What we do expect, though, is that it will be probably at a much more moderate pace than what we've seen over the past few years. In the past few years, we were under 50. Now we're nearing the 52 level. We're probably nearing a level where you will see some natural support for the peso come in. I think the weakness of the peso is really a function of having faster dollar demand growth relative to dollar supply growth. In particular, when you look at the capital requirements of infrastructure spending and the generally upbeat domestic economy, that translates to more demand for dollars in general. On the other hand, though, OFW remittances and BPO receipts are still healthy, but they are not expected to grow as much in the near term. So the weakness of the peso is really a function of having more dollar demand as opposed to dollar supply. I think for the peso, the levels of 51 to 53 should hold in the meantime. Because we are expecting further weakness, we could, however, go to the 54 levels, especially if the infrastructure push goes into full swing. From a longer-term perspective, I don't think anyone will be surprised to see the peso trade between the 50 to 55 level in the next 1 to 2 years, depending on the factors which kind of pan out.